Hi traders, Nathan Bray here from ACY Securities. Well, I want to make a case right now for gold, okay? I know I've been a bit hypocritical. Over the last few months, I saw that triple top up at 2,074 against the US dollar on gold. And yes, we have seen a sell-off. So there was some great shorting opportunities over the last month or so up there on gold. However, I'm now looking at a critical level, which I talked about in that video, up around this 1920, 1925 level on gold. So first of all, let's look at the fundamentals. So gold historically has been an inflation hedge, and folks, we've got inflation sticking around. The target for the Fed in the US was down around 2%. Okay, it's well above 4%, and talk that could kick back into gear and go higher. In Europe and the UK, it's continuing to blast higher. So inflation is sticking around, and it's a problem. So that, folks, is a good case for gold. Interest rates can be a problem because sometimes bonds look more attractive because gold is just a big rock. Okay, it's not going to pay you an interest rate return, okay, on that lump of rock. So interest rates going higher like they have been a bit of a hindrance for the gold price. However, we've seen in the US recently where they're starting to pause. They are talking about coming to the top of the tightening cycle. So lower potential interest rates or interest rates being paused again, folks, that's really fundamentally good for gold. You throw in the fear trade, okay, such as recession talk, people wanting to park money, okay, in safer assets because recessions mean we could get a sell-off in stocks, we could have issues with currencies, etc. Okay, so again, that fear trade or that safer asset in gold in a recession or an uncertain growth period around the world, again, is very positive for gold. So the level I'm looking at here technically, okay, is this triple top. We've seen a sell-off from that 2074, as I mentioned. Now, if we were to look at the entire move up from around the 1600s up to that 2074 triple top, okay, if we look at the pullback that we've had from that entire weekly move, it's down around that 38% Fibonacci retracement level in line with this uptrend. Now, if you were to go from the most recent weekly move from 1804 all the way to the top, that coincides, that 38%, with a 62 Fibonacci retracement level, okay, from the most recent weekly move. So that kind of combination to me could provide a good confluence of reasons to look for some support coming into place. The other thing I look at is the 2011 all-time high, okay? That's where we're at right now. So if the trend is higher, which it is, because it's put in this triple top higher, then if we find that that all-time high 1920-25 level becomes support as well, then we could see price going up with the fundamental reasons alongside. We could see that 2074 being retested, or in the current economic climate, we could see it blast through that 2074 and continue prices moving higher. So folks, keep your eye on these key levels. The problem is, if we get a savage sell-off and a break below this 1920 level, we could see this downtrend or sell-off continue. So that's why I think it's really key to keep an eye on the level and have your strategy in place and look for your entry on that you trigger into a trade and stick to that. Manage your low risk and keep in mind that even if it moves up to form a fourth top, or if it breaks through, we could see gold moving a lot higher in the near future. That's all from me, folks. Have yourself a great trading week.